All right, guys, the market is down a lot today. Pardon the hat, obviously go blue, but I was not expecting to make a video today. If you're new to the channel, we're here to recap the market. Another big red day, but again, I want to reiterate, look at all the green over here. Guys, when the markets are led up by a few stocks like they have been by the Magnificent Seven, when there's a pullback, they're the ones that are going to drive it. Ironically, Apple was up yesterday on a down day, not down a lot today. Google was also up, down 2.5%. Nvidia down 3%. So Tesla's down 4.5%. There's some reasons for this. We're going to go over what's causing this market to kind of go blah right now. Is it temporary? Is it permanent? If you've been watching us for a while, you know that I'm hoping this is the start of a bad bear market. If you're new to the channel and you're wondering, what is this sociopath talking about? Guys, we're here to teach a process. That process means understand what you're buying. When you understand what you're buying, you want prices lower so you can buy more. If you understand the value of something, if you know what it's worth and the price is below that, you buy a lot of it. You want lower prices. Imagine your favorite thing in the world to buy. Imagine it went on sale by 50%. Would you stop buying it? No, you'd be like, oh, this is great. I'm going to buy more of it. That's the same way I look at stocks. Today, a lot of red in the big companies, a lot of green on the smaller companies, utilities, real estate, specialty industrial, energy, medical device. Now, energy is interesting because we've talked about this. During sideways markets or down markets for a lot of the big companies, energy, different, commodity businesses, they tend to do better. So just watch for that. Gold's up a lot lately. We were buying gold miners back at 15 or 1600 on gold. It's up to 4,000. But before we get into the topic of why the market is down today, I want to show you guys something. Let's look at Bitcoin. Let's see if I've got Bitcoin in here. Bitcoin fund. Okay, it's up, so that's not the right one. Let me pull up Market Watch and show you guys what's going on, because this is kind of a pet peeve. Oh, the Bitcoin's up. Okay. So Bitcoin, though, is down quite considerably lately. Why? I'll tell you exactly why. Because it follows the NASDAQ. Bitcoin is a tech play. Obviously, today it's a little bit different. I don't know why that is, but it suddenly shot up. But Bitcoin is down 15.5% in the last month. Guys, I keep repeating until I'm blue in the face. Bitcoin is not an investment, especially proven by the fact that it literally follows the NASDAQ. When the NASDAQ is up a lot, Bitcoin's up a lot. When the NASDAQ is down a lot, Bitcoin is down a lot. Just be very careful when you're buying these things. You understand what you're buying and why you are buying it. So let's look at the market overall. Consumer sentiment drops to a 3-year low as Americans worry about shutdowns' economic impacts. But here's what's interesting. When I was reading this article, this is what I saw. What was interesting, consumers with large amounts of stock holdings were more sanguine. Is that how you pronounce it? Seeing an 11% increase in sentiment. When you have more stock holdings, your stocks are up, you feel richer, you're like, oh, this is good. That is a very important thing to understand the difference of. People are expecting inflation to be 4.7%. But what's interesting is this is the lowest reading since July of 2022. In the middle of July 2022, we were in the middle of a bear market. People didn't feel so good. But what ended up happening from there? A few months later, the bear market ended. Stocks went up. We never had a recession. Things were fine. Rates had gone up a ton. People were worried about that. Nothing ever happened. It's just the overall excuse as to why things happen. All right, maybe. And don't get me wrong, consumer sentiment is something to pay attention to, but it tends to be backward looking, not forward looking, because consumers in general are backward looking. They don't look and say, what's going to happen in the future? They sit there and say, I feel like crap right now because this just happened. If stocks double tomorrow, this would probably be a lot different number. Okay? If all of a sudden inflation was down, it'd be a lot different number. They just respond to what's just recently happened, not what's happening in the future. Okay, that's the big thing here. So I don't want you to get too attached in economic data. We're still here to teach that when you buy a stock, you're buying a piece of a business, and your goal is to figure out what that business is worth. Then you look at the price that fluctuates in the market. If it's below the value, you buy. If it's above, you hold tight. That's the big thing here. Now, big company. Let's look at Tesla stock. Tesla is down 4% today on the heels of Elon Musk's $1 trillion pay package. Here's what this article is saying is another canary in the coal mine. What that means is they're looking at this saying, this is a sign of the times. Stocks are so insane, so ridiculous that even he could get a $1 trillion pay package proposed to him. Now, for those of you who are haters on the rich, just remember, well, first off, if you're haters on the rich, please get off this channel. But with this, he's still got to hit some metrics here that really matter. He gets $1 trillion if Tesla has a market capitalization of 8.5 trillion in 10 years' time. Guys, that's a lot. That's a lot. That's a big market cap in 10 years. The stock would have to go from 446 to 2,400. It's a big jump. Is it possible? Absolutely. But here's where I have an issue with Tesla. If they're more than a car company, that's how they get to that value. They've got to be more than a car company. And so far, still 90+% of their revenue comes from cars. In addition to that, look at Tesla's earnings before interest, taxes, depreciation. Must hit $400 billion a year. Guys, this last year it was $16.6 billion. So yeah, the stock's got to grow 6x. Its EBITDA has got to grow 16.6 to 40 is 25 times. Is that right? Something like that. 25x. That's a lot, guys. That's a heck of a lot. That's going to be hard. That's not easy to do. It's got to take a lot of cars, a lot of energy, a lot of robots, a lot of everything. And I look at that saying, robo-taxis, is it possible? Sure it is. But look where, I don't know, it's just a very tough task. And then the even tougher task is, how do you value that today? When you have no sales of robotaxis, when you have no sales of anything out there, how do you value something that does not really exist today? We have the car business, but guys, guess what? The car business is not worth $1 trillion some dollars. The car business right now is probably worth, I don't know, at half to one-time sales because they don't have any better numbers than the rest of the car industry. So they do, what did they do last year in car sales? Let's see. What did they do last year in car sales? 100 billion? Call it $85 billion. That means the car business is probably worth 40 or 50 billion today if they were very stabilized. They got more growth potential, but revenue's down. Elon Musk's reputation is a little bit hit. Now, if you're new to the channel and you like what you're hearing, and you like the idea of getting these updates, we did a lot of videos this week. This is a fast-growing channel for us. Subscribe to the channel. We go through earnings releases. We go through topics like this. When days are bad, you're going to want to hear what we say because we love bad days. We love the idea. I can't wait to be telling you guys, stocks are undervalued because right now they're still overvalued. But we're on pace right now for the worst week in the market since April. Oh no, what would happen in April? We had the start of that little bull market. April 8th was the bottom, and then the NASDAQ's been up 50-some% since then. Okay. But remember, if you're just chasing stock prices, you're not understanding what you're buying, which means when stocks fall, you're not going to understand if you should sell or not, which means you will sell at the wrong time. We're here to change that for you. So subscribe to the channel so you can learn how to do that. Here's what this guy is saying. Oh, and for Musk to rake in his trillion, there are all sorts of product milestones, robo-taxis in operation, robots sold, and so on that the company has to hit. Never say never. But if Musk and Tesla hit these targets, there'll be an outbreak of indigestion across the country as people who understand math as well as business are going to eat their hats. Guys, it's going to be tough. It could happen. And if they do that, it's going to be very admirable if he's able to accomplish all the goals that are set out. Don't hate on him because he's getting $1 trillion pay package. It's not a guaranteed trillion. He's got to create immense value for the company to get that trillion. Is it necessary? I don't know. But imagine a world in which we don't incentivize people to do better. At least here, there's a lot of fundamentals of the business that have to be hit. I don't like tying things to a market cap because he can't really support that. I would rather tie things and say, hey, listen, you got to get this much EBITDA, this much revenue, this much in robo-taxis, et cetera, and let the market dictate what the price is, not the other way around. Oh, man, it's interesting. It is absolutely interesting what's happening here. Does he need more money? That's not our decision to make, but nobody needs that much money. But it is pretty interesting either way. I want to pull up Tesla. Look at the analyst estimates. The analysts who pay attention, they do have a lot of growth here. $1.70 per share this year, growing to $9.65 in the next 4 years. That's a lot of growth. That's a lot of growth. What is that, 7 times? No, 6 times growth? No, not quite. 5.5 or something. I don't know, something like that. That's a lot of growth. But if they're adding a lot of high profit businesses to the business, because remember, full self-driving was the hype a few years back. That's going to be the next thing. That's a software business. It was a flop, complete flop. They were selling it for $12,000, didn't sell. $8,000, didn't sell. X amount of dollars per month with 2 months free. After the 2 months free, less than 2% of people signed up. As an example, our software here, we charge people for a 1 week trial, and 83% of them sign up for the year after that. Elon Musk was giving a free trial, letting them use it for 2 months to become ingrained in it, and less than 2% were even signing up for the monthly after that. It just tells me people don't want it, or people don't want to pay for it, I should say. Okay, makes sense, but people, when you're valuing a business, you have to consider these things. And the story will change. The story used to be full self-driving, it used to be cars, then it was full self-driving and technology. Now it's robo-taxis and robots. If that doesn't work out, what's it going to be next? Because you have to always justify these prices that keep going up. Revenue? Guys, if in 10 years, the next 4 years, they're going to double revenue according to this. They got to double revenue again. No, they got more than double revenue. I mean, it's going to be absurd. It's going to be very, very difficult. It's going to be tough, but who knows what happens. Now, we're talking about the economy. This I really liked. Expedia says people are still making travel plans, and it's not just the wealthy. All right, listen, travel is probably one of the first things out there that people cut if they think a recession is imminent or they think their jobs are not going to be there. I mean, it's easy. You're like, okay, we'll sacrifice the trip this year. We'll go next year and do a better trip or something like that. Expedia is saying, no, we're still getting people to sign up. Now, they're going to grow naturally, but that gives people a little bit better feeling out there. Airbnb forecasts better than expected fourth quarter sales, but they're down 2% today. Guys, I have several properties on Airbnb, and I don't know what this means, but the bottom line is I'm going to be aggressive, make sure they're full. And luckily, my properties are brand new, so I'm still building up the clientele, and I'll be able to raise my rates as time goes on. And I have higher-end properties. So my guess is mine will be hit harder if we have a recession than other people's regular properties. That's my guess. Because people are going to go, instead of this house, we're going to get this one. Who knows? Let's see what is going on with the market right now. We have the NASDAQ down 1.5%. It was down almost 2% earlier. Dow's only down 0.5%. And look, the S&P, 0.86. Almost half of what the NASDAQ is. Guys, I assure you that in a next bear market, the NASDAQ will fall much harder than the S&P and the Dow. I assure you of this. And if we have a bad bear market where the S&P falls 40, 50%, watch out, NASDAQ. I expect there to be a 60 or 70% bloodbath like it was in 2000 where it fell over 80%. But guess what? If you're listening to our channel, dollar cost averaging at the peak in 2000 to today, you still would have made 14.5% or more return dollar cost averaging annually with buying at the very peak and watching your money fall 80% to start, as long as you kept dollar cost averaging and going up. So guys, that's the channel. If you're new, subscribe. If you've been here a while and you want to check out our 83% yearly sign-up software, we have a 7-day trial, gives you all the tools, the community to make you a better investor, but more importantly, to make you a calmer investor, which will make you a better investor in the long run. Thank you for your time.